Let's be real. In today's financial world, you're getting hit with a dozen different signals at once. You see record highs, you hear about geopolitical crises, the Fed is shifting policy. It is a ton of noise. So the real challenge is cutting through all of that to find a clear investment thesis for the future. And today, that's exactly what we're going to do. We're focusing on 3 high-conviction ideas for 2026. Right now, as we're sitting here in late 2025, the market is a total puzzle. It's like we're living in this strange world of contradictions, where you have this incredible opportunity sitting right next to extreme risk. And for anyone trying to plan for the next couple of years, this is a really critical moment. And this whole thing really boils down to one central question. Are we looking at a market that's just being pushed up by record-breaking corporate profits? Or is it a market that's on the verge of being completely derailed by some massive risk? Well, the answer, it turns out, is both. And that's exactly what makes this environment so unique. I mean, this shows you the core tension perfectly. On one side, you've got the S&P 500 hitting all-time highs, driven by just incredible earnings. But then, on the other side, a single announcement about tariffs on China recently wiped out $770 billion in tech market value in one day. It just goes to show you how fragile all this strength really is. But if you look underneath all that chaos, you start to see the real story. There are these powerful, long-term shifts, secular megatrends that are driving everything. Corporate earnings are actually accelerating. A record $1.2 trillion is being poured into AI. And a weakening labor market is kind of forcing the Fed's hand to rethink its policy. So these are the forces we're going to follow. So our first megatrend, it isn't about the fancy code or the complex algorithms. No. It's about the physical stuff, the actual infrastructure that makes this entire AI revolution even possible. You can think of it as the foundation that everything else has to be built on top of. And this quote just nails it. For the last couple of years, the big story was all about who could make the fastest chips. But now the bottleneck has moved. It's not just about the GPUs anymore. It's about the picks and shovels of this new gold rush. The power, the server racks, and especially the cooling needed to keep all that new hardware from, literally melting down. Which brings us to our first company, Vertiv. And their Q3 numbers pretty much tell the whole story. Revenue beat expectations at $2.68 billion. Adjusted earnings per share, it jumped a staggering 63% year over year. But the real signal here is the organic sales growth, up 28%. That shows a fundamental, massive surge in demand for their products. Now, the crucial thing to get about Vertiv is that they are a pure play, a company that is focused exclusively on this infrastructure bottleneck. They provide the mission-critical power and cooling for data centers. And once a giant like Google or Amazon designs a data center around Vertiv systems, the cost and the risk of switching to a competitor becomes huge. That's some powerful customer lock-in right there. If you need just one number to understand Vertiv's position, it's this one. A $9.5 billion backlog of orders. That's basically guaranteed revenue that stretches well into 2026, and it insulates them from any short-term market swings. Demand is literally outpacing their ability to supply it. Okay, so we've built the foundation. Now let's move up the stack to our second megatrend, what we're calling AI's brains. This is all about the software layer, the intelligence that's actually going to monetize all of that brand new hardware. And the whole idea here is that while the hardware build-out is obviously huge, the truly explosive long-term returns could come from the software companies. I mean, their high-margin, scalable models have the potential to generate returns that might even outpace the chip makers as this whole AI revolution enters its next phase. This brings us to Palantir. The company posted what some people called an otherworldly quarter. Total revenue hit $1.2 billion, up 63% year over year. But the number that truly changes the entire story is that U.S. commercial growth. That's the key structural driver to watch. For years, the big knock on Palantir was that it relied too much on government contracts. But with its artificial intelligence platform, or AIP, it's really transforming into a commercial software powerhouse. AIP is basically becoming the operating system that allows huge companies to make real-time AI-driven decisions with their own super complex data. And here is the result of that transformation. A 121% year-over-year explosion in U.S. commercial revenue. Now, this isn't just growth. It's what they call an inflection point. It proves that their move into the private sector is working at a scale that very few people thought was even possible. But here's the catch. And it is a big one. The stock trades at over 90 times forward earnings. That's a valuation that leaves absolutely zero room for error. The market isn't just expecting growth here, it is expecting perfection. Which, of course, leads us to the essential question for any investor looking at Palantir. Is that explosive growth really worth the sky-high valuation? This paradox, this tension between incredible fundamentals and extreme pricing, that is the central conflict of the Palantir story right now. So we have the foundation and we have the brains, but there's a third, often overlooked component that could be the ultimate bottleneck for the entire AI industry. And that is power. I mean, where is all the electricity going to come from? This quote sums up the problem perfectly. The demand for electricity from data centers, it isn't cyclical. It doesn't go down in a recession. It is a relentless, one-way surge that is putting enormous strain on our existing power grids. AI's growth has a very real, very physical constraint. So what's the solution? Well, one of the most promising technologies out there is the Small Modular Reactor, or SMR. Just think of them as small, factory-built nuclear power plants that can provide a massive 24/7 stream of carbon-free electricity, which is perfectly suited to power a cluster of these super energy-hungry data centers. And this is exactly where GE Vernova comes in. As a pure-play energy technology company, it's totally focused on modernizing the grid. And even more importantly, its BWRX-300 is one of the most advanced SMR designs in the world, with the very first one in the Western Hemisphere already under construction. GE Vernova is really positioned as the industrial giant that's ready to solve AI's looming energy crisis. So, there we have it. 3 distinct megatrends and 3 companies at the center of them. The question is, how do we put all of this together into a single, cohesive strategy as we look out to 2026? Here's how it all fits together. You've got Vertiv as the core play. It's the non-negotiable infrastructure supplier with that massive backlog. Then you have Palantir. That's the high-growth, high-risk play, really targeted for its explosive potential. And finally, GE Vernova is the defensive industrial pillar, a long-term play on the policy-backed need for more power. So together, they create a pretty balanced approach to the AI revolution. And here are the specific signposts to watch for over the next 6 to 9 months. Any Fed rate cut is going to be a huge tailwind for growth stocks like Vertiv and Palantir. For Vertiv, you want to look for new gigawatt-scale contracts. For Palantir, you need to watch if they can sustain that triple-digit commercial growth. And for GE Vernova, any new regulatory approvals for their SMRs would be a massive, massive signal. So, as we look ahead, the AI revolution is clearly here. There's no debating that. But this analysis leaves us with a final, and I think pretty provocative thought. Are the biggest long-term winners going to be the companies writing the code? Or will it be the ones building the physical world, the cooling systems and the power plants that make it all possible? That is the question that could define the next decade of investing.